Hello everybody, welcome back to Candle My YouTube channel. This is Xauusd and today is 13th of May 2025 and we're going to be talking about the XAUSD chart and I'm going to analyze it on 5-minute time frame. And specifically we're going to have a particular focus on triangles and how do they form, what are the possible ways that triangles usually form, and what are the trading opportunities with when such patterns form, and why is it important to somehow distinguish the failed breakouts from the successful breakouts. So let's just jump into it and see what this amazing chart has provided for us. And the main reason that I have in fact chosen this chart, today's XAUUSD, is that because we have three main triangles that it has formed, and I think it's worth talking about. So let's just dive into it. I'm gonna just be talking about the first day of the market, which was yesterday on 12th May 2025. Market in the opening just started rallying down with a big gap up, then formed a triangle, which you can see here. This is our triangle. 1, 2, 3, 4, 5. Then it breaks from downside. It is confirmed with this candle, so you could just easily short market here on this candle and put your stop loss above the bigger candle. So this must be the initial move, which you can see clearly it has touched your profit target here if you had taken this trade. And the reason is that we consider the triangles and continuation patterns, and they are really reliable, and most of the time they break into the direction of the market. So if I consider this as the first leg, which truly is, and then it just forms this triangle, which is also a trading range, then wait for the confirmation, it breaks, then suddenly every seller into the market jumps in to take the short, and even the buyers. Okay, so that's why the second leg forms. They know these triangles are continuation pattern and they look for the second leg and just take it on. So something else about these triangles you should know is that they are magnets. Magnets means if, for example, this is this much big, for example, it's been for 4 to 5 hours in the beginning of the day, it was forming. So it is possible that the price would just come into this area, specifically the middle of it, today or the next day. And something else about the middle of these triangles are magnets, and the reason that I have drawn this rectangle here is that I believe market is going to touch this place somehow. So something else. After the second leg forms, we know market enters into the channel, which this one is the channel. 1, 2, 3. After 3 move, it just it usually stops and creates the trading range, and this is where the beginning part of the channel is, where market is the area that market can just bounce into and come down and go up, and this is the trading range, because these two first candles are our spike and this is the channel. And now when it just breaks the channel, it enters into the trading range and forms another beautiful triangle, as you see here. And this triangle has been forming during the London session, New York session, and also in the middle of the day until the midnight, and even the beginning of the Asian session. And that's why I don't believe in market sessions that much, because I believe price action will do whatever it needs to do. So you don't need to just be worried about every sessions. So after this triangle broke, and I know someone like me who knows the market cycle and who's been working with market cycle for many years, I know that we are still in a trading range. All right. So even if this triangle breaks, I don't believe this would be the continuation pattern. It somehow could just bounce up again. That's why, and I always look for some areas to find the possible resistance and support levels after channel lines break. This was our channel, it breaks. Now I just look for possible places. This is our first place, and then this one is the other possible. So this is the whites of trading range, and channels are always a part of trading ranges. So it comes down, goes up, comes down, goes up, comes down. Do I have to wait for the market to continue on going up? Not at all. So you have to just take the other side of the trade, which I took it here. I took two positions. I opened on this candle and this candle, and this is what I do in trading ranges. This has always been my strategy. When the market comes to the support level, I just wait to see whether it reacts to this level. When it goes up and just makes a small, even a bit correction, I'm going to just buy even at the market, or even buy limits or buy stops. And then I wait for the market to come into the middle of the trading range, or possibly to the top of the middle of the range. But something about this, the reason that I put my profit targets here in this level is that I believe the middle of the triangles are magnets, and markets respect to these places. That's why I got out. My TP easily got hit, and market just reacted to this level, which is the support, and then it started coming down. When it came up, I shorted market again, but it continued rallying up, breaking this pattern and continuing going up. And this is what it is. When you trade in trading ranges and this is your strategy, you have to just stick to your strategy. And that's the nature of the market. It could just calm down and make me another profit, but it didn't. That's it. As long as you manage your trade, when you just hits your profit target here, if you just had sold the market here or in this level and had put your stop loss above this high, yes, you would definitely market would definitely hunt your stop. But that doesn't matter, because you have already made a lot of profits, and let the mass do the job. Okay, and this is my strategy, and I don't care about what market does. Okay, sometimes I read the market correctly, and sometimes I don't, but that doesn't matter. The only thing that matters is to stick to your strategy. So, guys, this is the first candle of the day today, which is the 13th May 2025, and the reason that I have put this candle into a rectangle is because this is the first candle of the day, and this candle is so important. If you see, this was the middle of the trading range. This is not by chance, But this opening candle of the day has been formed exactly in the middle of the trading range, and I don't believe this is just by accident. There is mass behind this candles. All right. So the market just starts opening, and we know we are in the trading range. So if you even had traded with this, if you just trade with triangles, which a lot of price action traders do, when it breaks from a level, which the level is here, they just jump into the market, put their stop losses in above the middle or above the last high. Yes, they could just make money, but I still believe we are in a trading range. So when I saw this reaction to this level, I realized that this two levels and even this failed breakout here are respected by the market, even this low, and market just couldn't successfully break it and continue going down. That's why when it rallied up, I started to take the opposite part of the trade, because I believed as long as we are still in a trading range, market can just bounce up and down for even 2 days. Nobody knows. Okay, so after the market broke from the other, and something else, when the market does this, I consider this as a failed breakout, this part, because market comes to the middle of the trading range and goes down again and can just continue going down. But it wasn't the case, so I instantly assumed that this was a failed breakout in the triangle. And when this happens, market usually does the other thing. So here, which is the case, market broke the triangle from the top by this beautiful rally up, and even goes higher than the channel, which is the failed breakout, comes back into the channel, forms a very beautiful small double bottom, a very good entry point. You could just enter on this candle or this candle or even this candle and take this small part. And when I realized that the beginning of this cycle was this candle, so I can consider it as a spike. And if you see, the very next candle is a bearish candle, and also there is a pullback here. So if there is a candle, a bearish candle in a leg, doesn't matter how small this little candle is. Sometimes these very small moves lead to big rallies, to big channels, which is the case here. This small bull candle is the beginning of a market cycle, new market cycle. So goes up, comes down, goes up to a spike's leg, then it just starts forming a channel, which is the case here. Channels usually finish after 3 touches, 1, 2, and 3. And then we should expect market for 80% of the time to break from the other side, which is the case here. So when it does this, we consider this as the first leg, and this is the second leg. We have talked about this in XAUSD analysis. You could just watch the other videos I have on XAUSD to see how these legs form. So after this channel line, this trend line breaks, I know that something in market has changed, and it has entered into the third part of the cycle, which is the trading range, which is the case here. So spike, which is this candle, forms a channel with 3 legs, and also this one with a failed breakout leg. So third touch of the trend channel line, it breaks the trend line, it enters into the trading range. Very beautiful. Now, When the market breaks the channel, the trend line, different trading ranges form with different shapes. They are confusing sometimes, and a lot of people expect the trading ranges to just be formed in a rectangular, very beautiful, neat rectangular, going down, up, like the forms and shapes we see in trading books. But the reality is something else. Yes, only 1% of the time market can form such beautiful patterns, which is so well organized, responding to two levels. But for 99% of the time, these forms are absolutely different, which is the case here. After this trend line, this channel breaks, market, let's just consider we didn't have this. Someone, to the eye of a beginner, this must be a triangle. Yes, it is, definitely. And in trading books, they have been taught that trading their rectangles, when they break from apart from one side, which is this side here. Let me just zoom a little. So this is the break. So you should just immediately enter into the direction and put your stop below. But look what happens. Market instantly comes down again and continue its way what it has been doing. Why? Because 80% of the time trading ranges breakouts fail because they are magnets, no matter whether it just breaks in with 2 bars or whether it breaks during the day and just goes up or down, rallying for creating another cycle. But the very next day or 2 days later, you can see the market has come to respect this level. This is how trading ranges work. So after this trading range, just this breakout fails, enters, traders might get confused. They say, oh my God, that doesn't work. When they enter from here, their stop losses are here. So market comes down again. Their stop losses could be hit, but fortunately they have put it into a good place, which I did here. But I didn't take this trade, guys. I took my trade about this candle, and I'm going to tell you this about the scenario behind it. When I see the market is in a triangle, first market failed here and created another high. So I'm going to just easily redraw my line. So do you see this beautiful triangle forming here? So it just goes up and down. And then what clearly I see from this level to this level, I'm going to, if I just draw this line, I see market easily breaks from downside, but it fails again and comes back. And I really like to trade failed breakouts in trading ranges. If market isn't successful to do one thing, it usually does the opposite thing. So if it can't break from downside, I consider it the odds, and the trader's equation is that it will just break from the other side. That why I took the trade on this candle, two very tiny small positions, and since it's a trading range, I somehow consider the market to hit my target in at this level, these highs, okay, which is my first profit target. The risk to reward ratio is more than 1 a little, and for this candle, for this trade, the risk to reward ratio is even higher. If I just measure it and show you, if this is my risk, 1, 2, 2.5, more than 2 risk to reward ratio for the first level, and it would touch here because I expect this is in a trading range. So, guys, to sum up everything, this is how trading ranges work. they usually the triangles are trading ranges, and 80% of the breakouts usually fail, even in a tick, which is a tick here. You see, you have a tick here, just 1, 1, 2, 3. It just breaks it. It can't make it, comes down and does the other thing. So this is the first point about them. The second point is that the middle of triangles are always magnets. And the second thing is that triangles are continuation patterns. So if you see somehow a triangle is forming in the market, just go back and read the market's structure to see whether before forming this triangle, whether there is a leg, an obvious leg or not. So if there is a leg, the odds are that the second leg is possible to be formed in the direction of the market, okay? Which the direction here is downside. So if this is the first leg, this is the second leg, and market cycle, you remember this is the spike, channel line, after spike it forms channel, after 3 touches it usually breaks, it enters into the third phase of the market, which is trading range. Fortunately, today we had enough triangles to talk about easily. That's why I have chosen this subject on this session. So another bigger triangle forms, it fails, bounces in, comes down, fails again, and does the other thing, right? The small tiny tick we had here, sometimes the failed breakouts could be even as big as a leg, or sometimes 10 bars. If it can't hold and make the breakout in 10 bars, it does the opposite thing, which is the case here, comes and breaks the triangle from the other part, forms a channel, 3 touches in the channel, forms another triangle, can't make it, so you can just consider it does the other thing, it does the opposite thing. Then since it's in a trading range, you can buy low and sell high. So guys, just tell me, what do you think about triangles? How do you trade them? And are you comfortable with such price action, or you just trade it the other way? The other way, I would be extremely happy to see how you trade the market. And let's just see for this pattern to see what happens, what it does in the New York session, which starts on this line, which and see how does this New York session works when enough money just pumps into the market. Please hit the like button, subscribe, and make comments about what you think, and just share your ideas. Thank you so much. See you soon.